All right. Hello, everyone, and welcome to Stock Market After Hours. My name is Mark Rusin. I'm a CPA here in the state of California. And thank you guys for joining me on our Stock Market After Hours live show, our weekly live show where we just like to talk about the market, see what I'm seeing in the market, talk about some of the questions that you might have in the market. But as we always like to start, let me know where you're tuning in from and what are some stocks that you've been buying or even selling. Let me know in the comments. This is meant to be an interactive show. So I'll give you guys some vantage points of what's going on in the market, some of the things we talked about last week, some of the stuff I've been talking about in my Discord. If you're part of the Stock Investors Edge newsletter, it's free to join just our basic subscription. So there's a link down in the description below. But also want to tell you right now about our 25% off Memorial Day sale. So if you've been wanting to try out one of our subscriptions, whether it's Edge Plus, whether it's Options Edge Plus, everything's geared towards options in that one, or whether it's just our simple quick pick one, which is a monthly report that comes out with 5 stocks that we believe are good buys. You can check out the link down in the description below there. So let me know where you're tuning in from and some stocks that you've been buying or selling of late here. So I see Shiva tuning in from Texas. Shiva, great to have you. What happened to the markets today? We'll be talking a little bit more about that. Sean from Portland, Oregon, holding on to cash right now. Tom's tuning in from New Jersey. Dennis from New Jersey. John, great to have you on the live show today. Buying a little Uber. Uber's one we've been talking about in the Discord. I know John's part of our Stock Investors Edge there. Good afternoon, Mark. Looking forward to hearing your thoughts on today. Tuning in from Boise. We got Quebec in the house with Ben Long. Good to see you. Chi-Town. Love it. Parking cash offshore savings account at 7.3%. There we go, right there. That's a good little return. New York, Priyanka, great to have you. United Health, what do you think? That's one that if you are part of our Edge Plus subscription, you get trade alerts anytime that I buy or sell a stock. I had bought the stock recently, and once the news came out about the potential fraud, although nothing has really come of it yet, we don't know. It is just a report about the DOJ. Fraud's not something that I mess with and don't want to just blow it off. There's such thing as buying the dip on high quality companies. But if we talk, there's more and more reports. We got another report on United Health today. I would like things to iron out on a few more facts. If that means me missing the very bottom, that's completely fine because I have a lot more confidence knowing I'm not catching a falling knife. Now, this goes to show that even the bluest of blue chip type stocks can run into troubles sometime. There's one thing of running into troubles that may be economic troubles, but there's another thing if you're doing things kind of under the table or shady dealings. So that's, again, a report. There's been no findings on it overall whatsoever. So it's something that's going to go under investigation, something that we're going to have to watch closely. But I am out of United Health. It's one that I sold upwards of $500, dipped back in recently, but it was pretty much a matter of 24 hours. I was out of it once the report came out. So no position in United Health right now. Chris, great to see you. Curtis was buying a little ARE and some CVX. Shiva bought UNH, added some PANW. So Palo Alto reported yesterday. Jeffrey, great to see you. Buying some ARE and a little SCHD. Love to see that. Lee isn't selling anything, but buying SCHG, Amazon, DUHP, and a little VOO. Tuning in from Tampa. Great to have you. Sean, first time here. Winnipeg, great to have you. Thanks for tuning in. Dower, good to see you, my friend. Carlos from SoCal. There we go. There's a neighbor. Buying a little UNH. Be greedy when others are fearful. Absolutely. Bought United Health on the dip, and it still went down. Hey, well, that's the way the cookie crumbles. Some there, but the number looks okay for now for a buy. So again, if you are someone that isn't close to retirement, 3 to 5 years, and you believe in the company long term, then definitely that's something that you can jump into, knowing there could be further downside. So it's to each their own from that standpoint. Do I keep Disney or sell? Disney's had a lot of momentum there, she said, of late. It's a stock that if the economy can hold in, if the consumer can hold together, I think it's one that has a lot more upside. I mean, when you look at the difference between the likes of a Netflix and the likes of a Disney, the market cap gap is massive. And although I believe Netflix should warrant a much higher market cap there, I think the gap is pretty wide overall and something to look at. Obviously, it's not below $100 when it was well at its lows there, but it's had a lot of momentum. and something to look for in the market right now. Thumbs up, everyone. I appreciate that. I'm thinking of buying 2 shares of SoFi. Any thoughts on this? SoFi is a name that I'm continuing to watch. It is high on my watch list. It's a name I want to get into. Now, going into SoFi, though, you do want to be mindful that it has a massive short position. And what that means is there's a lot of people out there, whether it's institutions, individual investors, that are betting that SoFi is going to fall. So what that means also is it can add a lot of volatility. So know that going in, that this could be a very volatile stock. It could be up 10%, down 10% on any given day from that standpoint. So, do understand that heading into it if it's a name that you're seriously about looking to buy overall. What else do we have? Appreciate your always good info. I appreciate that. Bought a little Archer Aviation and it went down. DCA, then building dry powder on the sidelines. Never a bad idea to have some dry powder. I like to keep it around 3 to 5% is kind of my goal in terms of cash, because we never know when opportunities are going to present themselves, even as the markets climb or even when the markets are falling there. What's your view on the yield max scripts? Their yield is crazy and I'm avoiding it since 12 months, but I probably have gained my capital back already. MSTY. So these ones, yeah, the yield is enticing, but that's really the major play there. I'm someone that tweets about it often. Never invest based on yield alone. If you want to have a place to park some cash, that could be kind of, if you're looking at it from a short-term perspective, that's the way that I look at it. Same way, I look at the likes of a JEPI and JEPQ. Same exact, high yields, not as high as some of these yield max type ones, but you can get a 7-8% yield right now. But it's also somewhere that I'm not looking to keep a JEPI, JEPQ for 5-10 years from now, because that's really the play is strictly the yield there overall. King David said, do you think REITs are still a good buy? Depends on the REIT. So again, REITs are a wide ranging sector group. There's a lot of high quality REITs. There's a lot of really poorly ran REITs from that standpoint. And that's why I don't invest in REIT ETFs. Again, I follow and track REITs very closely. And that's a sector that if you look at all of the REIT ETFs, the top 10 holdings pretty much look the same. That should tell you something right there, that there's a big bifurcation between the highest quality and the lowest quality REITs. And it's pretty consistent which are the most well-run, high quality, most profitable REITs that are on the market with the best properties in the best locations. That's going to be your Realty Incomes, your Prologises of the world, your Equinix, so on and so forth from that standpoint there. So awesome. A lot of great questions here today. Let's jump into the markets and see what's going on overall. Today's going to be one of those iPad related days. So we could see what the Dow Jones, so red across the board overall. Only thing that was really in the green was the VIX, the CBOE VIX there. So we saw the Dow Jones drop 800 points today. NASDAQ dropping 1.4%. S&P 500 down 1.6%. We can see what the chart looks like here on the S&P 500. So here's a look at our year-to-date performance so far. No, I don't have any scratches on my car so far, so I don't need that ad. Over the past 5 days, we're down almost 1% in the S&P 500. Over the past month, though, look at that, 9% return in 1 month. Still negative over the past 3 months, and on a year-to-date basis, we now have crossed back into red territory. So brief period, we jumped into the green. On a year-to-date basis, we are back in the red there by a little over 0.5%. Over the past year, up roughly 10%. But the thing with the markets right now that especially a lot of retail and a lot of new investors need to pay close attention to is yields. And my colleague in the Stock Investors Edge, Chris, made a great comment today, and I'm going to steal it from him today, is the fact that yields are the dog, bonds are the dog, equities, or stocks, I should say, is the tail. The bond market is so much larger than the stock market. And far too often we get so fixated on what stocks are doing, you lose focus, or maybe if you're a brand new to investing, you don't even focus on what bonds are doing. Again, bonds are massive in size. So you need to pay attention to what bond yields are doing. And if we pay attention here to the 10-year bond yield on a year basis, we're sitting at 4.6%. And remember, bond yields have an inverse relationship to the underlying price. If people are buying up bonds, the bond price will go up, yields will come down. But what's happening right now is a lot more selling in bonds. People are starting to lose a little bit more confidence in U.S. Treasuries. So we have the 10-year sitting at 4.6, and we have the 2-year sitting at above 4%. The 30-year sitting at 5%. So across the board, you see all green on your screen right there. Yields continue to climb. So if we go back to the 10-year right here, taking a look, we could see that we're upwards of 4.6%. The high point on that was 4, and we'll call it 3/4. And that was back at the beginning of the year, January 11th, was when we got up to 4.75. What happened to that once the rates went up? How did we start the first quarter in the S&P 500? Was not a great quarter by any means. Eventually, rates are going to start impacting how companies can perform. It's going to make a lot more debt for companies that are looking to expand. They utilize debt. There's a lot of companies that use variable rate debt. As rates go up, it makes their interest expense that much more. So that free cash flow that they're generating, no, they're not having as much to reinvest back into the business. They're having to what? Pay higher interest fees there. So something to be mindful of, especially if you're looking at things like small caps, companies that have to rely a lot more heavily on debt. And if we look, we go to, let's type in IWM to see how IWM has been performing for us of late. Again, this is the iShares Russell 2000. We could see over the past year down about 2.5%. Year to date, though, down 8% so far. So really, we're starting to see interest rates can weigh heavily, especially on small cap type stocks. Now, there's a lot of small cap out there that don't utilize debt, and that's a great thing. They won't be impacted. Those are the ones that you can find some outliers and get some positive upside on overall. So the moral of the story right there is make sure that we pay close attention to what the Treasury market is doing right now. So let's take a look at our sector performance now. So if I share my screen back with you guys, we could take a peek at what's going on in the sectors. So let's start with year to date. So again, year to date right now, again, this is going to be a lagging indicator right here. So it won't include today's down day. So we could see, let me snap that page for you. Whoop, not sure what happened there. Might not let us snap it. They might take it away. Overall, looks like that's what they're going to do. So on the 1 year performance, you could see here, 1%. Again, that's as of yesterday. We did lose 1.4% here, 1.5% here today. But our leading year-to-date, industrial, utilities, staples, still all of those speak to safety. Okay? So those are defensive sectors. Investors move to these areas when they're concerned about the near term or what's going on in the economy here in the States. If we go into what's been happening over the past 3 months, we only have 3 sectors that are in the green. So again, if you are someone that, if you're a subscriber to our Edge Plus subscription, this is something that I talked about in my weekly Edge report. I talked about that heading into this week, be concerned about valuation. We've had a fantastic run in the markets. We had 6 straight green days. But when you look at valuation, when you combine that with technicals, we had an RSI level that was upwards of above 70. Okay, we were just kind of getting out of touch. It was due for a pullback. And what do we have now? We have that pullback that started as of today. We kind of just had some consolidation the first 2 days in the week, a slight down day yesterday. But today was when we saw something a little bit steeper. Now, is it going to have follow through into tomorrow? It definitely can, because we started to see the selling. And what happened towards the end in that last hour, again, the opening hour and the last hour is where the most of our volume is going to be. That's where the big time investors make most of their moves. They're not going to do it at lunchtime by any means. They do it in the middle, or they do it at the beginning, and they do it at the end. That's what you want to see. And what happened? We had an acceleration of the sell-off. People are starting to get concerned about valuation, starting to get concerned about technicals, starting to get concerned about yields. Okay, don't let the picture of high interest, high yields lose your vantage point. Don't be so laser focused on just stocks. Keep an eye. Doesn't matter if you invest in bonds. I don't invest in bonds myself. Now, do I have high yield savings accounts? Yes, but I pay close attention. First thing I do when I wake up and I eventually get to my computer or on my phone to see what stocks are doing, I go straight to the 10-year. What's the 10-year going to do? What's the 10-year doing today? Because that's going to give me an indication of how that day is going to go. And what have we seen? Yields up, yields up, yields up. So something to pay close attention to, especially when you look at 3 months and see, hey, we only really have 2 sectors that are in the green right now. If we go over the past month, though, we did see some momentum. Last month was a good month for the index overall. We had infotech, consumer discretionary, industrials. Those are the leaders that we are accustomed to seeing when the economy is doing well. But it was also more of, hey, these stocks were beaten down so hard right now, and we had a great move moving forward. So definitely something, we did get momentum, but now things are kind of pausing overall. So S&P 500 valuation high, technicals are high, yields are going against us. Things are stacking up more against us than for us right now. So there's not reason to be highly excited. So what does that mean for an investor? Does that mean we just completely stop investing? No, because there's those defensive areas that you can get into. If you're looking for an ETF, SCHD is still, hovering around 25, 26 bucks right now, which I think is a great entry point. But start building up your watch list. Do your due diligence ahead of time. This is what I tell people that go through my investing course. We need to be able to do our due diligence ahead of time. Just because you do your research on a stock doesn't mean we have to jump into it right now. But you hopefully have a better idea of what stock price you want to jump into if it in fact falls. Or you can utilize options for that as well. And again, if you're interested in any of this stuff that we are doing right now, we have our 25% sale, our Memorial Day sale that just launched. For if you've been wanting to try out any of the subscriptions that I have, whether it's Edge Plus, which is all about stocks, you get access to my portfolio, trade alerts, our monthly members only meeting, and our weekly Edge report, stock deep dives, a slew of other things. You can check that one out. Or you can check out Options Edge. If you're interested in stock options, trades that I'm doing, you get a weekly Options Edge report that comes out detailing to help educate and give you the knowledge behind some of the trades that we're doing as well. That's going to be the Options Edge subscription. Or we have a brand new tier, which is the Ultimate Edge, which gives you access to everything that we have to offer at a discount. Again, everything is 25% off right now. There's a link down in the description below if you want to try it out for a month or take advantage of the sale and try it out for a year there. So that's where we're at on our sale right now. But let's go through this is our midweek recap. So right now we have the fear and greed index that's sitting at 67. So we're in that fear. Again, another thing that's pointing towards the stock market needing a bit of a pullback. So these are the things that we look at. These are the things that I talked about in the Edge report that comes out every single Monday morning before the market opens, giving you guys a heads up about a pullback and why we believe a pullback can happen in the near term. And that's exactly what we've seen here moving forward. So let me jump over to the comments, make sure I'm not missing anything. Have your yields, but have the rest of it too. Well said. Good evening, Mark. Go Knicks. There we go. Knicks Pacers. It's like old school. I feel like I need to be watching the NBA on NBC. Back with the John Starks, Patrick Ewing days, Reggie Miller and stuff. What are we buying on red? Red days are the best days to buy. We don't want too many of the red days, of course. That sounds great all around. Think I'll check it out. Definitely. There's a link down there, Rebecca, if you want to check out. It'll give you more details on what we offer in each subscription. Hey, Mark, how bad can the market get if Fed keeps refusing to cut rates? So great question here, Kevin. So, the thing that we have to think about right now is inflation is still something to be had. It's not like we're back fully at 2%. It's moving firmly in the right direction. But something I talked about last week, and in our members only, in greater detail, our members only meeting that we had last Saturday for any Edge Plus subscriber. Again, that's another perk of the Edge Plus is I do meet with members on a monthly basis to go through portfolio moves in the market in greater detail, is the fact that all of these tariffs that we've had in the past few months, none of those have really hit the overall economy yet because companies loaded up on inventory heading in to the year. There was a boatload of inventory. So a lot of things that have been sold so far, if you think about Walmart and Target, so on and so forth, those were non-tariff goods. But now we're going to have to start stacking up again. The orders that are placed today are the ones that are going to be utilized for the holiday season when we get to December for Christmas and all of these other holidays to give gifts out. Okay, that's the major retailers primarily are laser focused on making their budgets during those 2 to 3 months, call it the holiday season. Okay, those orders are made today. And as of today, there's tariffs on it. Now, a lot of the reciprocal tariffs have come back, but there's still tariffs, an added tax. You can't move factories from China to the US in a matter of months. That's something that takes years to do. So companies can't just stop buying things. They are going to be forced to buy things, which means they're going to have to pay a tariff. Those goods are starting to come in now, and those are going to show up on your CPI report that you're going to see in early June for the May report, that you're going to see in early July for the June report. Those are going to be the key ones to see, is inflation still in fact going down, or is it starting to creep back up? So if that's still a concern and the economy is doing okay to a degree, by cutting interest rates, that could push this inflation thing out of control. So the Fed's got a tough deal right now. Is I think they need to see at least 2 more reports at a minimum before they have enough data. The data right now doesn't include any of the tariffs. And if you cut rates today and the spending spree starts to go on again, because that brought everything down, now we have tariff money coming in, tariff costs coming in, more spending, inflation can just completely get out of hand there. So I understand why they're holding it flat right now overall. So that's kind of my take on tariffs from that standpoint. All right. Any other questions that I can see right here? Private equity ETFs are looking good or bad? There's a cliffhanger. We got a cliffhanger. Bought some RTX for that Golden Dome coming. That's going to be a big one. A lot of spending that's going to happen with the Golden Dome project there. So let's jump back to the iPad here and keep rolling through our midweek report. And again, this report that I'm going through here, this is for if you just wanted to sign up for the Stock Investor's Edge for the free version. This is a midweek recap that you will get in the middle of the week. You also get one over the weekend, just a high level going through a few things. So we had some retail earnings come in. Home Depot was okay. They squeaked out some same store sales gain. What we saw last week from Walmart was okay. Target wasn't all that great. They continued to struggle there. But again, far too often people put Target and Walmart in the same sentence like they're identical twins, and they're not. Walmart is the largest grocer that there is. Target has that footprint to a degree, but the grocery business is nowhere near the size of the grocery business for the likes of Walmart. If you pull that out, then you can kind of compare Walmart to Target. That would be an apples to apples comparison. Again, I understand why people do it, but just know that difference there when you're comparing results, saying, well, Walmart's growing this fast. Why isn't Target doing that? It's part of the grocery business. That's a consumer staple piece, whereas Target is more of a consumer discretionary type of business. And we know that the wallet has started to, consumers are starting to tighten up on their spending to a degree right now, hence why Target is going down overall. You get some of the key points in our midweek recap right here, talking about Home Depot, Lowe's, Target, tariffs, and what you need to know, and all of that stuff there. So what's something else that's been in the news with the markets this week is we got the Moody's credit rating cut from a perfect AAA credit rating down to that AA1 credit. Now, did I make anything of it? No. This is something that's been, in my opinion, long overdue. And the last one we got was something like 14 years ago. So do I look to it to say, oh, this is going to change my outlook on investing? Absolutely not. It's more looked at as the debt situation in the U.S. is getting worse and worse. That's something that we have known as citizens here, is each administration that comes in is spending more than they're bringing in. So we have a situation now where the current administration is trying to get a foothold on this debt crisis so that we don't fall into a financial crisis. But at the same time, they're talking about one of the biggest tax cuts, which is going to cost trillions of dollars there. So great, we're having tariffs come in, but are they going to cover the difference in a lot that's going on with the tax cut situation? So that'll be something that we definitely want to keep an eye on here moving forward overall. But showing you a little bit more about what we have in our midweek recap. Waymo. Has any of you taken a Waymo? I did Tempe. I went to Tempe. What was it? Back in March. So a few months back, went there for spring training, and I saw this car driving around. And I went inside a store. We were there for spring training baseball, went with the family, and I came out and I'm like, oh, there's that car again. It looked like one of these. I'd never seen one before. It looked like one of these like Google Maps that's trying to get pictures so that when you look up an address, it has a picture of something. That's what I thought of it. And then I went somewhere else to go charge my car. And I'm like, wow, that car's over here again. And then all of a sudden I started seeing them everywhere. And I'm like, okay, I thought I was seeing the same exact car. It was these Waymo cars because it's got all of these gadgets on the side and on top and everything. And then during the day, that was all at night. But then during the day, I go, holy smokes, that's a Waymo. Had the little tiny sign on the side. And I saw that there was no driver in the front seat, which was wild. Didn't get a chance to take one. My wife didn't feel as comfortable with the kids and stuff like that. I would have loved to. But have any of you tried taking a Waymo? I know they just got expansion. They were in Tempe, I want to say San Francisco. Now they're going over into San Jose. So in terms of autonomous driving, Google is far exceeding that of Tesla right now, but Tesla is trying to close the gap. They're expected to bring their autonomous robo-taxis here in the next month or two. I believe they're starting in Austin, Texas, is where they're going to kind of get a head start there. Overall. So yeah, there we go. Austin, Texas by the end of June. So you could see that on our sheet right there by the end of June, starting with 10 vehicles. So again, Waymo just finished their 10 millionth paid ride in their market. So they have a lot more markets that they have 250,000 rides on a weekly basis. Expanding into San Jose, and that continues. They just got expansion over a couple months back over in Miami as well. So something to keep an eye on between those two companies. So as you can see here, here's kind of our key points of the write-up in the midweek recap that you could see. But has anyone, I'd be curious, anyone in the comment section has taken a ride in a Waymo and what they thought of it. They're all over San Francisco, and I saw one going to the San Francisco airport on the freeway. No way Waymo here yet. Nope, no Waymo. No Waymo rides for you yet. Got it. All right, so as a reminder, let me scroll back up to the top here for those of you that are just joining us. We do have our short-term Memorial Day sale that just launched. You get 25% off any of our subscriptions, whether that's Edge Plus, Options, Edge Plus, or the Ultimate. If you want everything included, which already gives you a discount, you're going to get 25% on that as well. This is for both monthly or annual subscriptions. Obviously, the annual is going to give you the largest discount of all. But if it's something that you just want to try out for a month, now's the best time because this is the lowest prices that we have. It's either Memorial Day or it's going to be our Black Friday sale, which isn't going to be until November timeframe. That you get a chance if you want to try out any of our Edge Plus, get access to my portfolio, as well as Chris, who shows his portfolio, or any of our stock option trades that we're doing as well. Definitely check out the link down in the description below. All right, so now let's jump over to our charts and take a look at a few different stocks here. So let's begin with the S&P 500. So we'll look at SPX, and we had a few profitable trades that we only had out for, I want to say, less than 48 hours. Looking for this pullback. I talked about it in the Edge report. For those of you that are subscribers, again, you get a weekly Edge report before the market comes out. What do I anticipate in the week ahead? What should we be looking for? And why am I looking for it? What did I talk about? For those of you that are Edge Plus subscribers, I said look out for a little bit of a pullback. What do we get today? We got that 1.5% pullback, because if you look at it here, let me take this out of the way. So we're looking at the S&P 500 in the screen that you see right now. Here's exactly some of the things from a technical perspective I was looking at. Here we were sitting up there at an RSI of 70 right there. You could see we had some resistance level right there at this 58, 50 range, if you want to call it exactly, which is kind of where we're trading right now. So again, as I mentioned, tomorrow, the follow through. Do we bounce back off of this level right here, or is it something that we see further downside? If we do get further downside, this is the level right here that I'm looking for, which is going to be another couple percentage points. So again, for those of you that are on the Options Edge subscription, you know that I put on another debit put spread looking for the S&P 500 to continue to fall there. So profiting on a falling stock. That's the great thing about options, is there's option strategies when the market's increasing. There's option strategies when the market's decreasing. There's option strategies when the market is consolidating and going sideways. They just differ from one another right there. So that's what we're looking at when it comes to the S&P 500. What are some other stocks that we've kind of been looking at? Google had a great day. The best performing stock in the S&P 500, my largest individual holding. And even though it's been having, a solid little run here of late, If we zoom in on this one right here, and let me take myself off of this so you guys can get an even better zoom in picture. There we go. Is we're kind of testing this resistance area right around 170 that you could see right there, but our RSI is still hovering below 160. There's still plenty of upside to be had. There was a lot of great news that came out of the Alphabet AI report that came right there. You could see this red line that was going. That's kind of continued area. That's a long-term trend. So that gives us plenty of upside to get up there, upwards of above 180 again. Hopefully that would be fantastic on a stock like Alphabet there. Let's see some other ones that I wanted to point to. So TTD is one that I talked about in our options group, saying, hey, this is another stock that's had a fantastic move, but look for some downside here. Why? We had an RSI that was upwards of 80 right there. Look what has happened. We touched $80 per share coincidentally. And what happened? Exactly as I intended. We went from 80 bucks down to the mid to low 70 range right there. You can profit on a falling stock price, and utilizing charts is a great way to do that. All right, let's see what else we have. What are some other stocks that we're paying attention to in the market right now? AMD is one that I was has had a fantastic, one of the best performing stocks over the past month. That's my asterisk right there. But lo and behold, when we look at AMD, a stock that I still own, I think I own 100 shares of right now. That was by way of an option play. We touched the 120 range right there. We bottomed out right around 80, slightly below 80. But once we touched 120, what happened? We were above 70 on the RSI, expecting a downturn. What do we get? We've got 120 back down into the 110 range is where we sit as of today. Semis were under pressure, along with a lot of things here. But where's our friend AbbVie? So again, AbbVie is one that has been under pressure because of a lot of the healthcare type bills that we've been talking about here. AbbVie is a stock that was trading well above $200 at the end of last year, the beginning of this year. First quarter is where we were at. That was kind of where we topped out. That 218 range, I think, is their 52-week high. Right now, we have an RSI that's kind of sitting in that no man's land right there. So the stock can go either way, but it's battling right around this 180 resistance line. You could see that green line that's kind of going across right there. That was resistance back at the end of 24. In the end of November in 24, and it proved to be an area of support for this takeoff area that we saw in the end of January, I should say. So this is that key area that we're trying to see if we can hold there. If not, I expect this stock, we will see it in the mid 170s very soon, which I think if we can get low 170s, that's a fantastic spot to be adding to shares of AbbVie, a company that has a great pipeline overall. And then just a fantastically well-run business. Let's see if there's any other charts that I wanted to kind of point out to you. Disney is one that one of you guys asked about earlier. So Disney is a stock that I spend plenty of money at to keep the with two kids that love Disneyland. We just went on a Disney cruise. So hopefully I helped all of you Disney shareholders. But we could see the stock bottomed out right there around $80. That was at the beginning of April, but it's just bounced in a big way upwards of $110, which is where it's at today. We have this gap area to be a little bit concerned about right now. So this is an unfilled gap area. So, look for the stock to eventually close that gap. That, anything under $100 is where I think I would be looking to add some shares of Disney. We have the RSI that was sitting above 80 right now, which is kind of where the stock topped out. If you look over here, anytime it's got above that 70 range, it went up a little bit and eventually ended up coming back down. So those are things to watch out for if you are a Disney shareholder. Now, if it's a short-term trade, maybe a spot to take profits, but Disney is not usually one I do any short-term trades on. I'm primarily looking for long-term investments. Deere is one that has also been on quite a move of late. This is one that I hold with inside my son's brokerage. This is his largest holding. And, the way I start with kids is I want to get them interested in stocks. So I try and buy things that piques their interest. My daughter loves Disneyland, so she's got Disney stock. My son loves tractors and jets, so he's got Lockheed Martin and Deere. So Deere kind of has topped out. We don't get too many RSI levels above 70 for them, but every time they have, if you look back at history here, what has happened? Stock falls. Hit 70, stock falls. Again, this is a short-term indicator. Hit above 70, stock is beginning its fall. So I think this is something that's probably headed towards below $500 based on what the technicals are telling me right now. From a valuation perspective, I know it's one that's looking a little bit extended on the run here. So I never let technicals kind of dictate my entire move, but when I'm looking at option plays or short-term plays, technicals are going to be a key piece of that. But it's never a trade that I make purely on technicals alone. There's always a mixed component with it overall from that standpoint there. So those are some stocks I wanted to go through on the chart with you. One other thing that I wanted to show you guys before we wrap things up here is our Fed watch tool here. So again, we talked a little bit earlier about the Fed cutting rates right now. You could see firmly we're at about 95% chance that there's going to be no cut coming for the June 18th. If we take a peek here at the probabilities, I'll zoom in on that for you guys just to kind of show you what those probabilities are whatsoever. So the next, here's that 95% no cut. Looks like in July, there's also setting up for no cut. And that's what I was talking about, saying we need at least 2 CPI reports for them to understand the impact. If we go through that and we're still sitting at the same CPI level, year-over-year growth that we're at right now, then sure, I think there's a little bit more momentum on we could cut, because we don't want the economy to get into this stagflation type of period. So we want to bring some growth back overall. But even when you get to the September meeting, it's only a 50-50 shot there. It's not, convincing enough. But once you start getting into, say, the October, December range, that's when it starts to get a little bit more convincing, pricing in maybe 2 cuts at the end of this year. By the end of this year, I'm still in the camp that if we get one, it's only going to be one. So that's kind of where I sit with rate cuts. But again, I'm going to let the data kind of drive the decision-making from that standpoint there. Again, be mindful that it is backwards looking data whatsoever. So that's all I got for you guys today here at the Stock Investors or Stock Market After Hours. If you are interested, make sure you hit up that 25% discount down in the link below. Gets you discount to our Options Edge Plus. If you want to jump in and see my trade alerts for any of the option trades that I'm doing on a week-by-week basis, you also get the weekly report. Edge Plus is going to give you access to my entire portfolio. Actually, in fact, multiple portfolios, trade alerts to anytime I'm buying or selling a stock or ETF, stock deep dives, and our weekly Edge report to kind of give you a heads up on what to look for in the week ahead to help guide you and give you an edge in the market as well. And if you want to be part of both, we have the Ultimate Edge tier that we just created, giving you access to both of those at a discounted rate. And on top of that, you get your 25% off. So check out that link down in the description below. Thank you guys always for joining. I love the Stock Market After Hours because you get a great group of questions, see vantage points from other people's viewpoints. I read through the comments, whether I'm able to do it live. I don't get to hit all of them, but I go back through just because there's always going to be something that maybe I missed, or maybe something that you brought up that is a different vantage point that I didn't think about. We all have one thing in common. That's why I love my community in my Discord, because we all have the same exact goal, and that is building long-term generational wealth. We're not trying to beat one another. We're trying to lift up one another. And that's the great thing about my community that I believe, and I may be biased, is the best in the world today. So thank you guys. And of course, yes, subscribe, hit that like button. That is always much appreciated. Become part of our Discord community. Take advantage of that discount. And with that being said, we will see you next week. Take care.